Happy New Year from all of us at Hart Energy. I'm Jessica Morales. As 2017 drew to a close, we reached out to industry experts to gain their perspectives on major trends that emerged or continued during the year and what to watch out for in 2018. What we heard was a combination of pleasant surprise, cautious optimism, wariness over looming challenges, and concern over the uncertainty that haunts multiple facets of the industry, including geopolitics, commodity prices, and the regulatory landscape. In the first of two segments, we began with a look back. We asked our experts what surprised them about 2017.
I was surprised by the degree of bullishness in terms of production growth that people saw. People put out insane numbers. We felt like it was going to be a little bit more difficult to grow. I was surprised that people got so bullish so fast. We think it's great. We think the U.S. has room to run and is a global phenomenon, but we don't think it can happen as fast as the market thinks it can.
I know investors haven't been happy. They haven't made a ton of money in the space. But I think the problem in 2017 was the underperformance in energy was exacerbated by the outperformance in non-energy. So money was flowing out of the space and energy became oversold this year. So it's kind of a dramatic year. So for 10 plus months, we have an oversold environment. Energy stock volumes are down. Investors are not as interested. All of that. And boom, we're in November and oil's $57.
I think the biggest surprise was around demand. Earlier in the year, the U.S. was kind of lagging. There were concerns about what was going on in the developing world, especially in India, that might result in some slowdown in demand. But really, as the year progressed, we saw a real ramp up in economic growth, real bullish market sentiment even in the U.S., and demand really exceeded most people, including our expectations.
One thing that I thought was particularly interesting was that there was so much M&A activity really focused on the Permian and the Delaware basins. You know, really people getting premium dollars for that acreage, very frothy processes around it. But beyond that limited geography on the M&A front, there wasn't that much going on. And once that activity happened and those assets changed hands, the deal activity in other places comparatively was almost dead.
I completely agree. I think the thing that surprised me the most related to that is sort of just the overall lack of growth. You know, we saw the growth in the areas that you talked about, but overall capital expenditures were down. There were some MLPs that, you know, people thought were going to be the new leaders and the new MLPs that were going to take off and start a new wave of MLP IPOs, and it just didn't come to fruition because they didn't quite end up where people hoped or expected them to end up.
We also asked our experts about investing.
We've seen a real shift in the mood of energy investors. Earlier in the year, they were quite optimistic on ability to grow and the shape of the assets and even the balance sheets of the companies. I think actually some of that bloom has come off the rose, particularly for certain Permian producers who have had really a difficult slog in the last couple of months. As a result, I think the industry is, it's a good time for investors to be optimistic about the potential for growth at relatively decent returns, provided people do it in a way that is maybe a little more measured and a little more selective.
If I was an investor, my first observation is that energy is oversold. So the whole sector is oversold. So that right there says probably a good time to look. I think the second thing about it is that you know, I'm overall optimistic about the supply-demand dynamics. The health of the global economy, the health of the U.S. economy. So I think it passes the smell test that you should be looking pretty seriously. So I have a perspective like I'm going to put some money somewhere for 2, 3, 4, or 5 years. So I think it's a great time to weed through, pick a management team with a strategy and an asset base that you really like and lean into it pretty hard. And don't expect it to be something incredible for 3 or 6 months, but do expect it to be a great investment over 2, 3, 4 years.
It really depends on the investment. I think that there are a lot of opportunities in the space right now, but they're not all created equal. We see prices pushing higher into 2018. We think that there's going to be more opportunities in the market, but a lot of opportunities on the downstream side, on the midstream side, and the right E&P. There's definitely opportunities.
I think certainly more and more people will be looking for other places to invest, looking for other ways to do so profitably in this price environment, trying to find opportunities to put that capital to work. Exactly where that is, there's been a lot of focus on the Rockies. A lot of people have been looking at that. There are even some people thinking, is it time to start looking in the Bakken again? Does that eventually become, you know, an area that people want to really refocus on? But there are a lot of question marks.
I agree, and I think related to that, one thing you're going to see is a continued stratification of good midstream assets and bad midstream assets. Where, you know, if you're in the right place, if you're in the right play at the right time, and you get the right contracts because there's constrained transportation and lots of supply, well, you're going to do great. But if you're in a place that hasn't had that maybe was a hot play 3 years ago and everybody was making money in every play, then it's going to be a different story for you.
Thank you for joining us. In our next segment, we'll learn about super hogs. Spoiler alert, they're a good thing, and challenges facing the industry in 2018. I'm Jessica Morales. See you then.
To stay up to date on the most recent Hart Energy videos, subscribe to our YouTube channel by clicking here.